If your product is primarily designed for enterprise customers, selling it down market could sound like a step backwards. But it turns out the tools and tactics you use to catch minnows can sometimes land you a great big tuna. This is Club Revenue, and I'm Cornelius Willis. Why would an enterprise-focused company choose to expand down market? Well, shorter sales cycles and higher close rates for starters. Typical sales cycle for an enterprise customer can last between 3 months and a year, usually requiring over a dozen stakeholders to get the deal done and across the finish line. Selling to small and medium businesses, or what we call down market, can go much faster because there's fewer stakeholders and processes involved. But more importantly, the vast majority of buyers actually demand a high velocity style entry point. Not only is down market faster, buyers insist that it be friction-free. In a recent study by Gartner, 77% of customers said that their latest purchase was complex or very difficult. And can you blame them? Oftentimes they're committing to a big ticket expense without ever having used that product. That's why the freemium or try before you buy tactic is really paying off for companies focused on product-led growth. Dialpad is a shining example. This cloud communications pioneer is focusing on 3 different market segments through an extraordinary product-led growth strategy. The company is accelerating time to value with a bespoke product that drives tremendous efficiency for its users and lets the customer drive the buying experience. Today we have Dialpad's Dan O'Connell here to share his winning formula for expanding down market. Dan, it's a pleasure to have you on Club Revenue. Today we're going to talk about a really important growth initiative for Dialpad, which is investing in down market selling. It sounds like that's probably both higher velocity and higher volume. Why are you committing to this strategic growth initiative at the corporate level?
Yes, I think there's a couple of reasons. One is we think there's a tremendous opportunity that we can provide a better service and better sales to just an underserved part of the market that's out there. 2 is we've got what we think is just a fantastic feature set that really caters to some smaller businesses. And I think there's this digital transformation that obviously is going on where, we've been caught in the middle of a pandemic. We do sell into all 3 segments of the market. And our SMB is an opportunity or a segment of the market, and we classify that as businesses that are literally 1 to 50 employees. We work with businesses that might just be a couple seats, but there's just a massive opportunity and velocity there that we think we can go and attack at scale.
So as you look at this down market move, what are some of the metrics that you're tracking to understand whether you're being successful there?
The nice part about sales is I always joke that none of sales is really rocket science. But what's interesting about this market that we play in, and I kind of bucket it as telecom and contact center, is really is speed to lead is the number one thing, which is when somebody's phone system is broken or their contact center is broken and not working, that is probably outside of email, the number one most critical thing to get right. And so when somebody reaches out to us to say, hey, I want to learn more about Dialpad's capabilities, the number one thing that we track is how do we get in touch with that person as quickly as possible? 2 is assuming that they want to talk with somebody, but 2 is just how do we make it really easy for somebody to go through a self-service process? And then how do we reach out to that person if they ever get hung up on it? So a lot of it comes down to this idea of speed to lead, making sure that we're really on top of the leads, making sure that we're qualifying really quickly, and just helping them through the process, whatever that might be, whether it's self-service or actually giving them some sales assistance.
So does this move to target SMBs require a new set of motions for your team, or is it just accelerating an emphasis on things that were already in place?
Yeah, so it's an acceleration. So fortunately for our business, we have always focused on pretty much, for better or for worse, when you talk to our investors is, if you look at our box, we've got a nice 9 box, which is we sell 3 products across 3 segments of the market. And somebody says, hey, if you focused on less, would you move faster? If you break our revenue down, it's pretty much a third. Wow. But we see this acceleration on the SMB business. And again, that goes back to, I think our competitors neglect the market or perhaps don't have the right motions. We figured out how to do this at scale. And we think there's just tremendous opportunity of again, people can go through the motions that we have or are really going through this digital transformation and we want to capitalize on it. So I think it's just this interesting time and kind of how do you go build a big business and be a little bit more focused on SMB? Again, we think there's just an opportunity there.
Accurate forecasting is such an integral part of strategic growth, and when teams are expanding their customer base, they need to be extra diligent. Let's get the metrics that matter from Clary's own Anthony Cesario. Take it away, Anthony.
Thanks, C-Dub. Dan is spot on about digital transformation changing sales, and the forecast process is no exception. According to a recent Forrester study, business leaders who prioritize using revenue operations and intelligence solutions in their tech ecosystem are almost 3 times more likely to forecast with more than 95% accuracy on a monthly time frame and more than twice as likely on a quarterly time frame. Nearly 70% of the companies in the Forrester study reported overall revenue benefits, including 59% improved win rates, 53% increased net dollar retention, 65% more accurate forecast, and 69% higher revenue growth. Bottom line, an accurate forecast is critical, and not just to predicting the business. It reinforces the discipline that is key to winning more and growing faster. Forecasting rigor unlocks all of your strategic growth initiatives and will certainly help you to move down market. Back to you, C-Dub.
Thanks for the insights, AC. Dan, is the data different for the different teams that you're leading? How are the data needs different, and how do you decide what's important for those teams?
What's most important is paying attention to conversion rates. We pay attention to obviously the conversions, whether they're accelerating or decelerating by stage, understanding the conversion rates as a whole. Are we winning or losing? Other things that become important for us are looking at the sales sourced opportunities. Are we too heavily dependent on marketing? Are we too heavily dependent on channels? Are our sales reps actually out there sourcing their own opportunities? Those all vary and differ. We've got different targets and expectations across segments. As I said, our SMB segment is heavily dependent on demand generation and CPL. So obviously we expect less contribution from sales source there. We want more sales source focused in mid-market and enterprise. So those are some of the metrics that we pay attention to and really key in on.
Thank you, Dan O'Connell, for these great insights about expanding down market. Wishing you and the whole team at Dialpad much success. Join us next time for another real-world revenue strategy right here on Club Revenue.